everyone. Welcome to another Wiser Wednesday here with Raja. Really excited to dive into a discussion about fundraising from idea to Series A. We're basically as a bit of a backdrop to this. We're looking at this in a sort of post sort of generative AI. It's not over yet, but as in it's like here, some of the hype's coming off of it, but it's still really big, and it's completely transforming like how startup world is operating, and especially like how the fundraising world is working. Raja Skogland, I think that's the correct pronunciation. You're an investor and founder of the visionary company and VC based out in Oslo. For those that know me, I'm James Potten. I believe in a world of entrepreneurial success without burnout. So fun fact, you said you begged like a founder 3 times to let you invest in a startup, and they were oversubscribed, and it's been your best investment yet. So love to hear a bit more about that. If you're listening live, please put questions in the chat, and we can look to go through those at the end. So Raja, let's kick off. Like, tell us about how you got to where you are today. Tell us about your personal journey.
Yeah, thanks for having me. Excited to share and connect with your community. So yes, my name is. So in Norway we say Raja. So here I'm known as Raja. I came to Norway 9 years ago. Before that, I used to be in private banking, did risk management, trading, wealth management, investment management. But my true passion was always entrepreneurship. I moved to Norway with my Norwegian husband. That's, you move to Norway for 2 things. They say oil industry, or love. So there are a lot of love migrants that like they call them.
Some people combine the 2, but yeah, sure.
Yeah, exactly. Why not? So I'm a love migrant to Norway. And basically when I came here, it was the opportunity to go fully into entrepreneurship. Long story short, built my network. That was the starting point. Built a huge network that led me to launch the biggest job platform for startups in Norway. We are, I should not say we anymore. They are in Sweden, Finland. This is the biggest job platform in the Nordics for startups to recruit talent. I was lucky and honored to be able to launch it in Norway. Then launched an online accelerator, got acquired, became CEO of one of the largest accelerators in the Nordics. And then I decided to go again on my own in the beginning. Now I have a team. So 3 years ago, decided to go into advisory services and investing, because that's what I love most. Advising, investing. That's the core business. We try to keep it simple, even if it starts to become complicated with too many products and services.
Yeah.
But that's the core. So I've been investing for the last 9 years. When I started my journey as a founder, I started investing. For me, it was about betting on myself as well as others. And especially in this space, you're in touch with other founders. So you know them, you get to know them, you can do good due diligence on them. So why not diversify your risk? It's already super risky to start your own business. So, inject cash in others to spread that. That's how it started.
Brilliant. Okay. Yeah. Look, and the startup world is, so reliant on people like yourself with that mindset, hey, because it's so difficult. And, and that's why we're going to be looking from that idea into Series A. So I guess, starting out with, we can kind of like walk through that journey a bit. So that idea stage, what do you sort of see, and what are you looking for in a sort of founder, or they may not even be a company by then. So how do you come across those businesses, and what's that sort of conversation start like?
It's a learning journey. So what I used to look at in the beginning when I started is now changing, because we're learning. We have invested in good companies and on some less good companies.
Yeah.
So yesterday I was talking to another VC here in Norway, and like exchanging thoughts and advice and strategies. And I told him that my latest bankruptcy, a company we invested in, my investment company, including others, was exactly the kind of founders that you are recommended to invest in. Charismatic, stage presence, storytelling skills, very strong, which are great, necessary when you run a business, right?
Yeah.
But it was so beautiful that actually we did not pay attention to what it could hide behind the curtains.
Yeah.
And we invested, and then we realized that what we were sold was a lot of, smoke and mirrors.
Yeah.
And now, and this is the second time that it happens to me. I invested previously in a similar profile, charismatic founder, visionary. We call the visionary company in VC. We are into visionary people, but now I'm going to change the name of the company to pragmatic company, pragmatic VC.
Yeah. I mean, it's super hard, isn't it? Because you see these, just like, as you say, like brilliant ideas and really strong sort of people that are putting themselves at the front of this. But like how you really dig in and look, I'm seeing it with the AI space. Like obviously AI is being put at the start or end of everything at the moment to try and raise money. And you kind of, it's the same thing.
Of course, we will not, and I'm not going to put everybody in the same, basket. The company that I begged 3 times to invest in, that's again an amazing founder, charismatic. He's on stage, he takes over. You're like, I don't know what you're selling, but I'm in. And that's what happened. And because I know him and he's a very good friend, I was telling him, listen, Andreas, I want to invest. He said, but you're a friend. I don't want you to invest. It's risky. I'm like, Andreas, whatever you do, okay? I know you're going to make it happen. So whether it's this or a bakery, I will invest in you. If you decide to tell me I want to launch a bakery, it's not a SaaS. Usually we invest in SaaS businesses, but I will invest in your bakery. Because he was the founder who could lead. So, it's about, we've learned, we want a founder who can lead, who has a big vision, strong storytelling skills. At the same time, now I'm very much into numbers, traction, talking to customers, and even more. So after the last, so we have a big portfolio. I have a big portfolio of directly and indirectly 70 startups. So it's normal that you have a few ones that, that don't keep up. However, after the learning we had, we prefer to invest in companies that we work with. As simple as that. If we have worked with a company, it's easier to do due diligence. We have helped them. They are usually post-revenue, so they can afford our advisory services. We got to know each other and see if we're a good fit. We work over 6 months to 1 year. We create value and they decide, do they want to let us in or no? We reinvest what they invested in us. We reinvested back. This is now our new strategy to get to know the founders, the company, the processes, help them optimize everything and see, and we can observe the results. Are they actually executing on what we're advising them to do or no? One of our investments before summer, this is what we've done with them, retail tech in Sweden. We work together. We have them fundraise. We have them increase their revenue, optimize their team processes and team performance. And then we introduce them to investors as well. And then we're like, actually, you're a good case. So let us join.
Okay. No, I really like that. That's really interesting. And I like some of the, you've been putting out some really interesting posts recently. I like the sort of your angle on, building a company is the new MBA. I think that's like a really powerful message to early stage founders or entrepreneurs who are sort of trying to decide between the two. It's basically a place to go and really learn about yourself and understand how it works in the real world.
You learn continuously every day. You never stop learning.
Yeah. It's bonkers, isn't it? So, and what's your thoughts on, because there's an element of sort of papering over the cracks sometimes with fundraising. So getting money in, can be quite a distraction, can't it? So,
Yes.
you know, for the founders, it can really take their eye off the ball in terms
Yes.
of like product development or going out and like, you know, building their networks and client base. And so what, you know, give us your sort of philosophy or sort of view on that.
So when I work with clients, with startups, I advise, I will do, if we can say, two main things in the process of fundraising. One is helping them make more money, so they need to raise less.
Right.
And for, you know, we have a company that we helped. They came to us saying we need almost 1 million euros. After working together, they realized, you know, if I focus on this ideal customer profile, if I remove some team members, if I automatize this, and if I increase my price, actually, I need to raise less.
Yeah.
So they raised less and they got oversubscribed. And when you are in a position where you're making money, you're not desperate anymore. The whole attitude is changing when you're fundraising. You're not desperate. You're talking from a place of comfort and strength, and you can negotiate with investors. No, you don't need them. You are an opportunity for them. And you can be picky when it comes to your investors. So they will be able to increase the profitability of their company, make it a solid case for themselves first, because they are the first investors in their company. And then it puts them in a good position to talk to the right investors. So I'm an investor who's not a big fan of having investors. So I'm running 3 companies right now. One of them has investors because it's an investment company. The 2 others are bootstrapped. I'm a bootstrapper. I love the best investors are clients. Either they pay for the services, and that's great validation, or they can even become your investors.
Yeah. I've experienced both, and I have to say that obviously sometimes you need something, you need like a small amount, like, you know, and we talk about pre-seed and so on, and sometimes you need a small amount to sort of get going, but it's a very different, you know, my experience was going from sort of 3 to 50 in 12 years bootstrapped, and kind of 0 to or 2 to 40 in not all full time, but in 1 year when it was funded. And so it's very, very different, like very, very different. You know, that whole thing about retaining culture, the whole thing about like, how do you kind of, are you able to, because if you, whatever you've got going on will scale, so you amplify, like, you know, problems as well as like successes.
Exactly.
In a business, if you put too much rocket fuel in it.
Exactly. And even the advisors, because I do have a board, my advisors, they are investors, they are founders, exited founders, several exits. And we talk about this. Do we need to fundraise? They're like, no, let's continue a little bit more. We can. We have the network. We have investors interested in investing in what we're building.
Yeah.
But we're like, do we need that? Let's continue 1 more year. We can make money. Look at this. Well, we're making money, but we can make more. We can scale this by ourselves. We do not need like 1 more year, and we can just like skyrocket our services. Yeah. So I think there has been a lot of, it's the media, it's the event, so many accelerators, no offense to the accelerator, but so many like pitching on stage. It's a business itself. Founders forget that this is a business. When you pitch on stage, well, the media are feeding from these stories as well. And everybody thinks that they need investors to build a business. No, this is recent. Before that, 20 years ago, most businesses did not need investors. Now you go around and you feel like everybody's raising money, and you're like, why? Do you need that? Why do you need investors? You maybe don't even want investors. You feel like it's an achievement if you say, I'm looking for investors. I'm in dialogue with investors. I have an investor. Sorry, you have a new boss now. It's less freedom. It's more reporting. Do you want that?
Yeah. There's elements of it.
It's less freedom. If it's the right investor, perfect.
Yeah, that's exact. I mean, who you end up, sort of, dating, as it were, is like also key, isn't it? Yeah, but it's a very different like world in your business, and obviously work with a lot of founders, some who do and don't have like investment, but there's sometimes, yeah, it can be a minority investor, but they sort of throw their weight around a lot more in the boardroom than the
they can still impact the business as even if they have invested 1,000 euros in your company, they still feel they have a say.
Yeah, and everyone has an opinion. If you ask them a question, you got to decide who you ask your who you listen to. So, if we sort of stick with like just early on a bit, there's this like obsession to find other like co-founders, and you know, suddenly, you know, grabbing the nearest willing warm body to join you, and you know, obviously often that's releasing equity, which you can only do once. What's your thoughts around that? You know, even before they perhaps know there's a real business opportunity.
What do you mean exactly?
So where you have someone who's kind of got an idea, and they quickly go out and get like co-founders, right?
Yes. Okay.
So this is. I
think this is also another risk. My advice: it's like telling them, you don't know when you're going to meet the love of your life. This is your ideal co-founder or your ideal investor. You can meet them, you know, the same day on the street. You never know. Or it's going to take a long time before finding the right fit. So what I recommend is that we need to be able to manage the business at our scale by ourselves. We need to understand every step. We need to stretch ourselves. And when we've done that, we can see, where do I need help? What kind of profile? One of the biggest risks and mistake I see founders make at an early stage, going with their best friend, or it can work sometimes, but going with someone who's very similar to them. You will end up having 2 CEOs in the company. You do not want that. It's better, start yourself, you're the CEO, and then you look at where do you need to be, what are your strengths, what are your weaknesses. If your weakness is marketing, get somebody with a marketing background. If your weakness is tech, obviously get somebody with a tech background. So try yourself and then find your weaknesses and find somebody to straighten your weaknesses.
Yeah.
Can support you.
Which again takes quite a lot of awareness, doesn't it? Because like there's often quite there's a certain mindset. There's almost something slightly missing normally in an entrepreneur's psyche to be willing to go on that journey. So sometimes
it requires a lot of communication. So I'm starting now a new company with one of my investors who's starting together a new company, and it's all about communication. Really asking the questions, but what, and trying to pick up on what is not said, you know, the body language, even, you know, the level of psychology where you need to get to make it work. Like, I feel like you're reluctant to this. What do you mean? Open up, communicate with me. What is behind this strategy? Where are you going? What do you mean exactly? It's a lot about communication. We talk a lot about the ego within our company. Is this the ego talking here? Right? What is
almost always?
It's a lot of self-awareness and removing the fears, trying to speak from a place of trust.
Yeah. Do you recommend sort of starting out building like a memorandum of understanding or something where there's a kind of...
It depends. It depends. Really? Yes. Really? I'm going to talk again based on my experience. These are the cases I can talk about openly. In my company, there are many that till today, they're advising me, they're working with me. We have a verbal agreement. Okay. Some others feel that they need a paper, right?
Yeah.
With those that I have a more flexible relationship, it's because we are exploring. We're still finding our way, right? So I say date your co-founder just like date your investor before getting into marriage, a commitment. During that dating period, it's a little bit like an open relationship.
Yeah.
We're testing. We're like, do we get along? Do it project based. Let's do a project. But if one of them really feels that strongly that they need a paper or to start the company, why not? I have had companies that we started before the company itself. We validated. And then we said, okay, actually, I want to continue with you. Or we validated and one of us says, I don't want to continue with you. I want to do it separately. It's the risk you take. But anyway, you can't force someone into marriage anyway. Or sometimes, like now, we have tested working together with one of my business partners for 6 months. And we had the plan to continue, collaborating. And now it feels like it's time for us to create a new company. So there is no right answer. It's about what feels right for both of you.
Yeah, no, really interesting. And obviously, things like shareholders agreements and so on, it seems weird to be creating those before you've even know whether there's a product to
want to
build.
work together. Yeah.
But there's things that can trip up later on if you don't.
I think how can I say? Because I'm thinking in French as well. So you need to agree on the big lines, right? So if it's a 50-50, right? Who's the CEO? Who's the CMO? What are the responsibilities? You need to agree on that. And it can be a contract between the two of you, a memorandum of understanding or whatever you call it, saying, I'm in charge of this, you're in charge of this. And if it works out, we create a company. Or if it works out, we split profit and then we create a company later. There are templates. It's really case by case. There are templates out there for shareholders agreement. They can also get in touch with lawyers if they really feel like it's needed, or an accountant. It depends on.
No, okay, no, interesting. It is it's really tricky when it's really early on. And what's your sort of view on when someone's got a side hustle? What's the because it doesn't mean that they aren't necessarily going to really get into it. It's just at that point, it's
as long as it feels fair to everybody. So you would have some companies who would write down the number of hours they work, and then at the end of the year they say, oh, I worked 20 hours and you worked 80 hours, so it's 80% for you, or something like that. Some others would say, this is a project base. We're both working towards a goal. We want to make it work. We're learning along the way. We split this, what sounds fairly to us, 50-50, for example. And let's see.
So then the journey, you've got sort of pre-seed, seed. Do you, because my experience is we didn't follow that, it is a sort of laid out kind of journey, but it doesn't have to be, does it? Like Series A, Series B and so on.
To be honest, even these names, what does it mean? From a company to another, some are introducing themselves as their pre-seed. And they're like, but you're post-revenue. How is that possible? I don't understand anymore that, right? Yeah. Some of these are going to say they're Series A while they have no revenue. I'm like, okay, it's fine. We can create names and I think it's from an investor. It's about, I'm investing now in 2 companies that are post-revenue. One of them is making 10 million euros per year. I never heard anything about Series A, Series B, or it's like, we're raising money. You can join. Yeah. This is what we're doing. Here are our financials. This is the company structure, and you're in or out.
Yeah.
We're not a Series A. They're not pitching on any stage. They're not doing any PR.
Yeah. It's really interesting. I mean, you do have a bit of a challenge in the industry is investors need deal flow, right? So you've kind of it needs a home, so then it kind of has to at the same time that you've got founders needing money, there's also deal flow that needs to go somewhere. So it's sort of self-perpetuating to some extent, isn't it, as a concept?
Yeah, but I also I mean, you know, when we create these labels, it also creates more clarity. I think it's about, and creates more clarity for the right parties to meet, you know. Investors who would say, we invest in post Series A, then Series A company, come to them. But I think there has been so many companies created. And in that case, the quality of companies is also, if you look at the big pool, in my opinion, it's decreasing because you have many companies just like popping and starting to call themselves Series A and thinking that there's something huge, while, I mean, validate the product and we can talk about something huge, about a huge market. First, get out there.
Yeah.
I'm just, like I started, you know, I'm just becoming very, trying to be more pragmatic, not looking at titles or big names. As an investor, I would like solid companies. And what it means, it's like founders, committed, dedicated, who know how to build a team. Like this is what we're talking about. Who have a good company culture. People are motivated. They have a clear vision and they have happy customers. And they want the help from investors, whether it's the capital, the network, or the knowledge that they want to tap into, to help them support their growth and go reach the next level.
Yeah. Are you know, you talk about from idea to Series A. Is there a reason sort of why you stop there? Is that where you see your sweet spot in terms of advisory?
Yes, exactly. Yes.
Yeah.
Yes. And this is where we have expertise. This is where it's interesting valuations, where we can still get in as investors.
Yeah.
That's why we target from idea stage to Series A.
Yeah.
To be honest, the idea stage, we don't really target them as investors. It's more to support them, to provide some good knowledge in the beginning. Yeah.
Brilliant. And when you know, when a founder's, you know, had a successful raise, what's the first, like, what's that meeting like after, if you're, you know, still advising on what next? Like what do you do? Like what's the discussion? And
now what do we do about the money?
Yeah, exactly.
It's gonna go into, first, the discussion is gonna go towards sales. When we look at sales, it's not just about, you know, how is the sales pipeline, which we can start there. But the discussion is going to go over the whole company. How are you running your sales? Who's involved? The pricing, the processes. How do you qualify clients? What do you do in terms of marketing? So we start with sales because this is what companies want to do, grow sales, increase revenue. And then we expand to analyzing everything in the company, analyzing even how the CEO and the team are managing their time. What kind of activities they're focused on. We might remove some activities. We might focus more on these certain activities to help them stay on track. Of course, setting KPIs, assessing the tech, looking into everything that needs to be done to make them happy and the shareholders happy.
Yeah. And like, what, you know, is there some benchmarking that you'd look to do there, sort of?
Yeah, there is always an assessment, whether before the investment and after the investment. Assessment, what are your goals? How can we achieve that? And create a roadmap with clear milestones and strategies. We get what's the end goal and reverse engineering. What do we do to get there? So we agree on the goal and we go back. Okay. We go back to even the weekly workflow. There is the goal, and then what does it mean every month and every week and every day even? This is how we scaled the hub.io. We broke down our time. So on Monday, I knew what I was doing from 9 to 10. At 10, if I didn't finish the task, move on. Task number 2 is waiting. Yes.
Brilliant. Yeah.
So you have to finish task number 1. And it's very satisfying. You're like, check, next.
Brilliant. It's tricky, isn't it? If that isn't how like a founder's operated before, and because everyone's different, aren't they? Some people don't even like look at
You
their
need
calendar.
you need to have access to that knowledge, otherwise you don't know, or you need to be pushed. So the reason why we created that weekly workflow, or we implemented it in Norway, and I know it was spread in the Nordics. I don't know if they used it, but I know that it was shared. I was going on maternity leave, so. And it was my company in charge of the whole management in Norway and hiring people to take care.
Yeah.
Big responsibility for such a big platform. So I had this new hire taking over, and I wanted to make sure she hits the KPIs. We had weekly, monthly, yearly KPIs to hit. So I designed my time and defined exactly what task to do at what time on Monday, Tuesday. And we had different tasks, from social media to outreach, to Google SEO, to ads, to Facebook ads, to partnerships, to events. So I gave her that and I said, now you know what to do every day at what time.
Wow.
And this is a methodology. This is something I had to come up with, but it was also thanks to an advisor and mentor I had access to internally, had access to her coaching, which helped me coach my team.
Mm.
And when we coach founders today, one of the areas we work on, it's workflow optimization, because I learned it from somewhere. Otherwise, if you're a founder and you just start and you haven't optimized your time and having that self-awareness, where you spend your time, what do you do? Does it create an impact? What is the return on investment? When I spend 30 minutes with you, what's the return on investment? What do I say yes to? What do I say no to? Because there is no clear return on investment in this activity. So for example, when I go speak at events, that started when I was managing the platform. So people, of course, they invite me to speak. They invite me to attend events. And I'm like, that's not interesting. I'm sorry. I'm going to spend 2 hours there. How can I maximize my impact, my time? Stage time. So I reached out to the same person and I say, are you looking for speakers? I can speak on this topic. They're like, yeah, sure. I'm like, yeah, great. Now I go. So today I still have the same philosophy. If I'm not a speaker at an event, I'm not attending, because I can do that. I can be a speaker at other events. My time is more valuable, even on LinkedIn, because that's my stage, right? Why would I go attend one event and talk to 2-3 people during that event when I can be on stage and talk to 300 at the same time? So that's the spirit. That's the mentality. How do you make the most of your time and focus and assess every activity to optimize your business and workflow? So, probably Pratik, right?
Yeah.
So he sent me a message 2 weeks ago telling me, Raya, a client of yours said about you that you're a machine. And I'm like, okay, I'm not surprised, because I've been called bulldozer, machine, whatever.
He is too, right?
It's because of that. It's not that I'm a machine. It's that I want to make the most of my time. So it helps me move quite fast in certain areas. Even if everything on a daily basis, I'm like, what did I do wrong? What can I do better? How can I achieve my goals? Because I have plenty of ideas and goals that I want to create.
Yeah. Well, I mean, hats off to you as well. Like, going on maternity, and I mean, it's so different, like being a young parent, I find, to the time I used to have before. It's just bonkers. And it's almost like I sort of feel like I want to create I don't know, like a community or something to say, hey, this is going to be different. Don't fool yourself, because you have just different like demands on your time now. It's just so different. So.
And maybe it helps you. I have 2 kids, and I think it helps you be even, more aware of your time, how you spend it, what's important.
Yeah, well, that's what I think. That's what's really interesting about what you're saying, because you have to become more effective, because I have to work in blocks. So I have to block out time, and this is what I've got to achieve in that time. And I know if I don't do it, it gets pushed into basically the evening. It's like once it's done bath time, it gets pushed into late, and then that affects sleep. So, and that has a knock-on effect to your efficiency the next day. So,
and you will feel frustrated with your kids, not happy, and that's not nice. You don't want that. So you have to be efficient to make the most of your time at work and with your family.
Yeah. It's look, it's a whole other discussion. But it's equally, the funny thing is no one can prepare you for it. No one tells you what it's going to be like. This,
Kids or business. Kids are starting a business, both.
Well, because your business is also a bit like a kid, right? Your business is like you're trying to steer it and you're trying to guide it and develop it and nurture it and challenge it. And there's all these things you're trying to do. And then, depending on the age of your kids, you're then having exactly the same thing over here.
I heard yesterday, I forgot the name of this founder who sold his company to Etsy. And he said that when he sold his company, he cried. And the interviewer said, "But why did you cry?" He said, "But it's like a baby that you see getting married to somebody else. It's your baby growing and you're nurturing it. And one day it's leaving for a new family." So it's very...
Almost need to do a father's speech,
Yes.
Yeah, it is. I liken it to the number of people in the company is like the age of the company. So, I always think that you get the early, the toddler, the challenges right at the start, but then it's sort of,
I will remember that one.
Yeah, but there's a nice stage, isn't there? Also, there's that kind of, 5 to sort of 9 or 10 people stage where everyone's talks about the good old days and what it was like then. And then you get into teen years and then it starts to get, and then you sort of have these chasms that you've got to get across. And so, it's a new challenge. And as we know, in the entrepreneurial world, solving a problem doesn't end problems. It just creates a new problem. So you just have a different thing that you've got to solve tomorrow.
Yes. Yeah. Same with kids, my dad used to say, small kids, small problems, big kids, big problems. Same with the company.
Well, I've got a 1-year-old and a 3-year-old. So there's in theory, small problems at the moment. So, oh, brilliant. If we take it back a bit to, another one of your posts that I really like. So what advice to founders would you give before they build their tech?
Yeah, it depends on the tech, obviously. But number one, talk to as many potential customers. Be clear on who's your customer. Try to sell. Yes. Even if you don't have the tech, even if you don't have a business plan, I don't care. Just tell them. I give an example. I go to you and say, okay, so do you feel like your windows are dirty? Okay. You're like, yeah. Would you like me? I can clean it for $10. Yes or no? Simple as that. You say, yes, I got a client. We can replicate this example to bigger companies. You go to them. Do you face this problem? If I solve it for you, I come back with a solution in 3 months. Would you pay for it? Yes. Okay. Well, would you pay for me today so I can build a solution for you? I'm going to be building the solution. It's happening. Yes or no? And then you perfect your pitch. You perfect your sales pitch and you learn. And at some point, you will manage to sell before you have built anything. I've done it. Many others have done it. I do it regularly. I sell stuff that I haven't built yet. And then I'm creating it on the go.
Yeah. I mean, it's a really interesting, because it depends on your mindset, and we could start getting into psychometrics and different ways of thinking, but it is uncomfortable, perhaps more for technically orientated people to want to sell something they haven't built yet.
Yes.
And so you end up, and that is it almost feels sort of disingenuous, but fundamentally that is
based on what? Who says who?
Yeah.
Right? And also I noticed it's the older generation that don't get it, that don't get this new way of working. For them, you need to build the hardware, you need to build the product, in the physical world. So you need to have this before selling it. But this is a huge risk, because what if nobody wants to buy it from you? Who says that they want it? So first, get in touch with these guys, these girls, or whoever. Make sure they are ready to buy what you want to create. And then go do it. Worst case scenario, you tell them, sorry, I can't do it. Here is your money. Or, sorry, it needs to be launched in 2-3 months. Or, sorry, bankruptcy. That's worst case scenario. And it happens even to companies who have the product.
Yeah. No, it is a difficult, I guess, kind of. There's elements of like entrepreneurship, which is what got you here won't get you there, and that's kind of like one of them, which is if you don't think like that, you have to start thinking like, okay, I need to check that there's actually like demand for this before building.
Exactly. And it's not black or white, okay? And there are gray zones here. There are different ways of doing it. You can get letter of intent if it's a hospital that you want to sell a solution to. You can get pilot projects that are paid at a discounted price. There are different ways of doing it. What is important to remember, like you said, it's the principle to validate that there is a need, not based on your own assumptions, but based on the market, and validating the need, even going one step further by getting some sort of commitment in terms of money, prepayment, a discount that they get, something, make them pay to see if they're actually willing to pay.
Yeah. And we couldn't emphasize enough on that point, because someone saying yes to someone actually signing a contract and paying is kind of, they are different things again, aren't they? Having interest is easy.
It's like everybody can say, yes, I'm interested. Good, go build it. And then you build it and they're like, I'm not so interested. Actually, I changed my mind. Yeah, great. You built something that now they don't want. Get them to pay. And we do that on a daily basis. When we buy a flight ticket, okay, it's in 1 month sometimes, it's in 6 months. When you pay for a hotel, it's usually days, weeks in advance. Concert ticket, same. Toys online or clothes online. Who told you that they're already produced? Sometimes you get them 4 months later.
Yeah. No, it's great advice. And it's really interesting. Like you'll be in these sort of discussions a lot. There's absolute gold in like what you're saying, and yet it still doesn't necessarily sink in when founders are starting their journey.
I had an advisor 7 years ago. She told me I was going to build my platform, online courses that I sold some years ago. And I told her, but, I feel like I need to create it first. She said, but Raya, you're going to create it, right? You know how to. I said, yes. She's like, so why not start selling it now? And I was like, you are right. So the mindset shift happens slowly when either we have a discussion with someone who can open our eyes on that, or we keep on doing the same mistakes. And at some point we're like, oh, I've been stupid investing so much time and money with no guarantee. So that also happens a lot to founders who have done it the first time, and second time they do it a little bit again, and third time like, I'm done with this. I'm going to learn something. No, I'm not doing it.
There's when you're looking at investing, there's certain like data points that, and one of them being, have they had a business before? Like what, that data point, do you lean into that a great deal?
Many data points. Okay. We have like, now I don't remember, but like 17, 20, something like that.
Yeah.
Yes, previous experience is valid, but that's not it. We also want team members that we have a good chemistry with. We look at elements that are also intangible. We get a meeting with the founder. I had that in the past. With the founder, I give a feedback and I feel it in their body language that they're on the defensive. They are not welcoming any feedback. And this, I'm saying, I am not feeling welcomed. My money, no. So we're looking for founders who are, again, we talk about the ego, willing to learn, knowing that they know something, but there is more to learn. who wants to, they're into self-development, on top, of course, of the usual metrics, usual KPIs, revenue, traffic, traction, and so on.
Market opportunity.
Yeah, market opportunity, business model.
Yeah. Okay, great.
So as an investor, basically you do a 360 analysis of the business. You look at everything. You look at the hard skills, soft skills, numbers, vibe. Do I like this founder? Do I enjoy time talking? Would they become my friends?
Yeah. Well, and that's why I like what you said earlier on. I had more questions about like sifting applications and all this sort of thing, but it doesn't seem so relevant there must be an element of that for you to decide whether you'll, work with companies to help them develop as an advisor.
I mean, the foundation, the starting point before investing, it needs to match our investment thesis. So our investment, this is something important that founders need to be aware of. What is the investment thesis of the investor they're talking to? If they're talking to, in our case, it's B2B, SaaS, Nordic, because we want to be close to founders, to help them, to meet them, actually. Also to do due diligence through the network. Giving a call to someone, say, I see that you're connected to this person. Have you worked with them? How is this guy? How is this girl? Are they nice? Are they, what can you vet,
Yeah.
Can we trust them? So we like to invest closer to home so we can do this kind of due diligence. So the investment thesis, when you talk to an investor, if you are from the fish industry, maybe you're wasting a little bit of your time if you're talking to someone who's into femtech, women's tech. If you are into femtech, talk to if you're building something for the femtech or health tech, talk to investors who understand your industry. Do not go to somebody who has other data points and metrics and benchmarks in mind. They will, of course, discredit or not understand or challenge you or waste your time trying to understand what you do. You're investing time educating them while they're just curious. Doesn't cost anything to ask questions and see, do I like this startup or not? Do I resonate with them or not? Does it, feel right for me? And then they tell you, actually, I don't understand much. What you're talking about. I don't know the market. So sorry,
Yeah.
Profiling investors is something that not many founders do. So profile them, put their name, list of investors you want to get in touch with. Check if they have the right industry for you, if they understand your industry, if they have worked within your industry, if they understand your problem, if they understand the solution, if they have the right expertise that can help you grow. If they have the right network for you, they can open doors, connect you to clients, connect you to business partners. They need to be able to create value and, more importantly, understand what you're talking about. If they are outside your industry, give it a try, but most likely you will be investing a lot of time educating them and maybe not getting a proper return on investment.
Yeah. Okay. No, I think yeah. And do you feel like you're quite upfront with that in how you position yourself? Do you think
if they
investors
check my website,
are good at...
If they should check investors' websites.
Yeah.
So if they go on my website, they will see that. But most of them shoot me a message on LinkedIn and they're surprised that I say, I'm not interested. You're too early. No. Give it a try. I'm like, no, you don't match my investor thesis. It's a no-go. You don't match.
Yeah.
And it's surprising that some are new to the terminology. No, it's not surprising. I'm sorry. You have to be exposed to it to know it. But I think there is, I hope, and I'm doing my best to educate more on what are investors looking for. And because it's hard for founders who have never been in touch with investors or exposed to investors or have been an investor themselves to know all these little nuances and what investors are looking for and how do they select the deal flow.
Yeah. Thank you.
Fault.
It's great. It's great. It's really helpful to hear it from your perspective, and I'm sure people listening are are considering that, don't, like, to some extent, don't sort of spray and pray on like LinkedIn and hope that it's just going to, you know, result in money. So
no. Fundraising can be very quick. If you have done the things right before, which is building your network, giving them time to get to know you, putting them on your investor newsletter, delivering on your promises. Yes. And building your brand. And of course, having clients as well and a team.
Excellent. So a quick fire round. Let's see if this works. Let's go. So would you rather, sort of like this or that? So a great idea or a great founders?
Great founder.
Okay, great.
Who cares about ideas?
A glass half full or glass half empty, kind of feeding back to you. Advisory.
It's always full. But I don't know what you mean. For me, it's always full.
Yeah, so it means like, would you prefer them just to always be giving you like positive news, or do you want to like?
No. I want to hear about what's going wrong so I can help.
Yeah.
Especially, really, we want to hear what's going wrong.
Yeah. Not to just get some.
Don't fear talking to investors. They are on your team. They only want the best for you. They want this company to work.
Yeah, there's alignment in that.
Exactly.
Very much so. So, you know, if you had a choice, like social influencer or tech genius?
A combination?
You're not allowed a combination.
They need each other. But I think I would go for the influencer because they have an audience. They're in touch with their customers, so they can figure out what kind of solution their customers are looking for, right? Because the tech genius, if you have a great tech, but you can sell it.
Yeah. It reminded me, it's that you triggered something. I was thinking about it earlier on because there's quite a lot of examples in like Silicon Valley where the business goes from obviously like the tech and the product in the first place, but the only real scalable kind of part is in the sales and marketing. So they become kind of sales and marketing companies. So they have to be like quite aware of that, don't they? They have to remember to like pull back towards the product.
So we can bring that nuance. It depends on the tech genius. If they have that self-awareness that they need marketeers. Some tech people think they just need the tech. The tech is enough to sell. Yeah.
No, it's really interesting. And look, it's a trick. Like, sorry, I forced you to like say one or the other, but up round or client growth?
Can you repeat?
So up round. So you know, next round is not a down round in fundraising versus client growth.
Oh, client growth, of course. Yes.
Yeah. Okay.
Yes.
That's all of it. Guacamole or salsa?
Both again. Guacamole or salsa. No.
All right, brilliant. Look, so we didn't really dig into like generative AI, but is there anything like any trends or anything you're seeing at the moment that would be useful, you think, for the audience to hear?
I think that sometimes it's not about the buzzwords. It's not about being a trendy startup. Again, to me at least, and the investors in my network, because we have invested for many years now in the AI stuff as well, that turns out to not have much AI, or turns out not to have any clients. They can't sell. They're tech people, and unfortunately, they wanted to be a tech team. In some cases, I'm not generalizing here. I'm just talking based on my experience. So I would say I'm interested in founders who are solving big problems. They have a solution and they're in touch with their customers. That's the starting point. Founders close to their customers. Then we can bring the tech. We can optimize. We can automate. We can bring AI. First, the customers. First, let's do the unscalable things. Like I talk about it a lot on LinkedIn. Let's create value and figure out how can we accelerate this.
Yeah. No, look, it feels right, and like the Gartner sort of hype curve is is real. It's always out there, isn't it? With the next most important thing. And there's a few comments. Like there's one from Tracy when we were talking about the sort of memorandum of understanding, and she, in the founder kind of like formation type thing. She just says it has to work long term for both parties, so win-win. I think like we're really up against it time wise. So like I guess final question is what advice would you give to founders? Actually, I actually have two. So what advice would you give to like founders and leaders at the moment to sort of take the leap, like to seek money in their organization?
What advice? Get to know investors, get to understand how they function, what they're looking for, and have just make them your friends. Build relationships. But the question is, how do you become a friend with an investor?
Yeah. And how do you do that?
Well, how do you become a friend with someone? You find common interests. You create value for them first.
Yeah.
You know their investor. Maybe you can connect them to another company that is at a later stage from your network. Maybe just create value. Actually, so I write a lot about it via my newsletter. And one of the very popular newsletter I sent lately is from a company I invested in. I invested in them before meeting them. We met like 6 months later by chance at an event. So he's sharing in the interview via my newsletter how he's built his relationship with investors, bringing them on board as advisors for some, reaching out to the alumni network of his university, talking to his neighbors. His co-founder was talking to his neighbors, and then they ended up investing in them. So just, yeah.
You never know.
No.
Pratik actually, he's got quite an interesting view that if you ask for money, you get advice. If you ask for advice, you get money. So I thought that was quite a funny.
Yeah. Yes.
Quite a funny angle on it. But is there any anything advice you'd give yourself? Like, is there anything that you change in terms of how you've approached this world in the last 10, 15 years in your entrepreneurial journey?
I've done some mistakes. I really usually advise founders not to make.
Yeah.
And I thought I've done this before. No, don't grow too fast. Don't hire too many people. Don't surround yourself with too many people. Don't get too many advisors. Don't start talking to investors too early. First, build the core, the foundation, the problem, the solution, get traction, talk to customers. If you're trying to solve a problem in an industry you have no net connections to, like it's as if I say, I would like to change to impact the oil industry with this new kind of oil. I don't know, I have no connections. This is going to be hard. Start ideally. I'm not saying it's impossible. It's easier to start within an industry that because you have a network, because you have noticed some problems, and you can start thinking about a solution. You're familiar with the industry. You're familiar with the processes. That would be, don't go too much outside areas of
recognize recognize what's if you cut yourself in half, what's at the core it's just
gonna take time. That's it. Just gonna take more time. Be aware of that.
Yeah.
And there are also another advice. There are also some problems not worth solving. It's not because you see the problem that there is a market, that maybe it's not worth your time. Maybe it's going to take you, a hustle and so much money and burnouts to solve it. Like, be a bit selfish.
Yeah. Think about your own, your commitment, your own health, and on going on this journey is it's so important. So, yes. Hey, look, been amazing to chat. Thank you, Raja, today. So there you have it. Make sure you see entrepreneurship as an opportunity to, learn about yourself and learn about the world. I think it's just such a powerful way to
Yeah.
to develop yourself, pick your co-founders well easily, and like know and try and understand the philosophy and the experience of the founders that you're trying to make friends with. So hopefully you feel you can get out there and make, if you need to, like, start that fundraising journey for yourself from today. Really, really some absolute gold, like real nuggets in here. If you have any questions, I guess reach out on LinkedIn. Raja, is that good for you?
Yeah, join my newsletter, because on LinkedIn sometimes I get many messages and I don't manage. I don't have the human capacity.
Yeah. Okay, great. So join the newsletter.
Follow me and join the newsletter to get my best knowledge.
What's the address?
It's on Substack. So Raja Skogland at .substack.com.
Okay, cool.
It's on my LinkedIn.
Okay, perfect. Finally, thank you everyone for listening today, and thank you for the awesome speaker, Raja. So I hope you feel slightly wiser this Wednesday. So take care, everyone. Bye.
See you.